Hi, and welcome to another daily recap. So today I'm going to recap day 138 and it's November 15th, 2024 Friday. So today I didn't get any trades on both EU as well as GU. So as per my analysis, the price went in the direction of my analysis, but I was not able to capitalize on the price movement because I didn't get the entry model in the direction of the play. So let's jump into whiteboard and see what happened today and why I didn't get any trades on this day. So starting with the fundamentals, today there was news right at the stroke of the Frankfurt Open, and there was news at um, the meet of the New York session. So with that in mind, let's start our analysis. So starting off with the EU, with in the daily time frame, the swing structure of the daily is bearish, and the price has swept the sell side liquidity here, which means there is a chance that the price can make a bullish reaction and then take out some buy side liquidity before pushing down. So yeah, that is my analysis for today. But with the current bearish momentum, all I can expect is I can't expect the price to push all the way up. All I can do is I can expect the price to take out some small buy side liquidity like the previous day high or some given some lower time frames buy side liquidity and then start pushing down, take out the and continue taking out the sell side liquidity. Why? Because you can see the bearish momentum is very strong. It is stronger when compared to this bearish line, which means that the supply is very strong and you can't expect a deeper pullback. This is the 4-hour chart. The swing structure is bearish, internal is also bearish, and the price has took some buy side liquidity and mitigated the premium prices, which means that there is a strong chance that the price can come down. So the daily is clearly bearish. It is I've written neutral because there is a chance that the price can push all the way up to this demand, and also the price has swept a strong sell side liquidity. But in 4 hour, it is very clear that the price has swept the buy side liquidity, and though there is some daily buy side liquidity available, as per the 4 hour, I can expect the price to come down. There is a chance that the price can also go up to take out this buy side liquidity and mitigate this 4 hour supply, unmitigated 4 hour supply before pushing down. If that happens, then shorts will be high probability. This is H1. The swing structure is bearish. Internal is also bearish. If I zoom in, so I can take both longs as well as shorts. Why I can take longs? Because I can expect the price to take out this daily buy side liquidity and mitigate this 4 hour supply. So if I am able to, if the price action plays out, then I can look for buys and target the buy side liquidity and the 4 hour supply. So for longs, what I must say is I must see the price sweep the sell side liquidity and then make a strong push up. The price has already swept the sell side liquidity and it has pushed up. All I must do is wait for the session to open, and then I can take this as my POI and look for longs. It's as simple as that. The more conservative way of looking longs is wait for the price to take out the Asian lows, which would be a major sell side liquidity. So once the price takes out the Asian lows, wait for it to confirm the bullish momentum, and then wait for the chop bullish. And once the price chops bullish, you can look for the fresh POI, look for longs. So that's how I play the longs. And for shorts, since price has already taken the Asian highs, this could be another buy side liquidity. If the price takes out this buy side liquidity and then chalks bearish, then I would love to take shorts. Otherwise, if the price continues to the bearish momentum, then I can look for the uh, shorts from this PO1. So anyhow, I can look to play both longs as well as shorts. So yeah, at 10.9, price swept the sell side liquidity and then made a major bullish uh, candle upwards. So I mark this as my PY. So this would be my PY, but price did not mitigate that PY and it kept moving up. And after taking the daily buy side liquidity and tapping into the 4 hour supply, price had chalk bearish, but I was not convinced with this bearish chalk because it was just a weak break. And sometimes when there is a weak close, you can assume that it has a liquidity sweep and the price can move in the opposite direction. But since price has swept the strong buy side liquidity, I expected the price to push down. That's why I just mark this as the POI. So this is the POI that I marked, and yeah, these are the conditions. This is actually phase A2 outside the swing range. and it has all the boxes ticked. Price is not reacting off from high time frame POI, and it is in line with the medium time frame order flow because the price at top bearish. And this POI has 4 out of 8 criteria met. How? Because it has swept liquidity, it has displacement, and it has made shift in the order flow, and it is unmitigated yet. And it is also formed during the kill zone, right? So there is high probability of this being playing out. So 4 out of 5 criteria met, and the high time frame is supporting the medium time frame area. So all the boxes are ticked, and it is a high probability conditions. What are the other confluences? It is pro internal, and there is no opposing supply, and there is no opposing demand zones, and it is just low resistance liquidity. And I'm having previous days low and equal lows to be targeted. And yeah, there is some structural liquidity also to be targeted, and this also struck the previous day's high. So turn off other confluences is also adding up to the high probability trade. So when there is a high probability trade, if it plays out, it's good, but most of the time, high probability trades won't, the entry models won't play out. In the same case, it happened like that. The price, this is the POI, and I assume this to be the lead. Price could have come out and took that lead and mitigated this POI, and then it could have pushed down, but price just rallied down without making any pullback, and I didn't get any trades on this day. So yeah, it's a sad day because the analysis was top notch, but I was not able to capitalize on this. Yes, what is all I can do is just rinse and repeat and do the same thing again and again and again and again and again. So yeah, coming to GU, the daily time frame, the swing structure is bullish, interval is bearish. And again, in GU also, the price has swept the sell liquidity, and price can go up to take out the buy sell liquidity and fill some daily imbalance right there. So if the price takes out the daily imbalance, then we can expect the bearish momentum to continue. So this is the 4-hour chart. The swing structure is bearish, internal is also bearish. So this is the extreme supply, which I'm expecting the price to hold, above which we are having the daily buy side liquidity. So yeah, once we go deeper into the smaller time frames, we can see that we are having immediate buy side liquidities. But we must also keep in mind that there is some other larger larger liquidity pools that can be identified in the higher time frames. So keeping that in mind, we must always take the trade. So I assume this as the strong internal high, but this is also a strong liquidity pool from the daily perspective. So from the 4-hour perspective, I assume this as my buy side liquidity. And if the price takes this buy side liquidity and then talks bearish, then I'll be happy to take shots on this one. This is H1. The swing structure is bearish. Internal is also bearish. So let me zoom in to zoom into the internal structure. Yeah, this is the 4-hour buy side liquidity, and it is almost near to the strong internal high. But what I can see here is prices already took the buy side liquidity in the form of Asian ice, and it has stopped bearish. So all this becomes valid, and this is also weak low because this low failed to take out this high, and it has stopped bearish. So this becomes a weak low, and this can be targeted easily. So price has took the buy side liquidity, and then it has stopped bearish. So now this is the POI that I'm looking for. I can look for shorts from this POI, targeting the weak internal. It's as simple as that. But this is also phase A2, price not reacting off from high time frame POI, and it is in line. It is not in line because no, yeah, this is actually in line with the order flow, and the high time frame is kind of bullish. So why it's bullish? Because there is 4-hour supply above, there is 4-hour buy side liquidity above. So I'm expecting the price to push further up, but the medium time frame is saying me that it's enough, you can come down. So what are the other confluences? It has swept the region. There is no opposing demand zones, and it has a time-based liquidity to target. Previous day low and New York low, and it has also got structural liquidity that is a weak internal low, and it has these two lows form an equal lows, which is also a low resistance liquidity that can be targeted. But I need an entry method, right? What I can do is I can look for lid LC1, which is not present here. So all I can do is wait for the clear the M15 LC2A or LC2B, or trade with M15 confirmation entry. So for me, M15 confirmation entry is price coming up and tapping into the POI, and then was bearish. So once the price was bearish, I'll mark the M15, the supply. So if the price mitigates the supply, I'll be placing a sell stop order below the mitigation candle. So I'm not interested in placing a sell limit orders and expecting the price to tag me in and push the price down. That's not the way I trade. I trade with the price displacement. So I place a sell stop order, and if the price as the if the supply took control and if there is strong displacement, then I'll be tagged in and price goes in my direction. If not, price just moves in the upward direction and invalidates its POI. So in theory, placing a sell stop order, placing a stop order has much more high probability of success than placing a limit order. But there is some other issues while placing sell stop order, while placing stop orders is that the risk to reward gets reduced and you will be entering late. So only these two criteria is there. But apart from that, if, if you're aiming for small risk to rewards and high win percentage, then this is for. But fortunately, so we are having a lid, and now I can place my LC. I mean, now I can look for LC1 model. But this is also an confirmation entry. Price came down, pushed up, and then made a strong IBOS. So this is the POI that I am going to place my order using the MC candle. If the price mitigates this into this MC candle, then I'll be placing sell stop order below and waiting for this placement. And you see, this is a difference between placing a sell stop order as well as a sell limit order. If I had placed my sell limit order, what would happen is it's just this is the flip zone. The price would have just flipped my demand and then took all my buy sell liquidity. But since I placed a sell stop order, I didn't get tagged in and the price went above. Now the entry model has become LC2, sorry, LC1. Now the leg investment has been taken out. Now I can confidently place the trade right here. But I didn't place the trade. Why? Because it was during the London lull, and I avoided placing the trade right here. So unfortunately, fortunately, it was losing trade. I just kept out of that one, and price went pushed further up. And it ended up that the price wanted to take out the London highs as well as the buy sell liquidity above, and these two formed a perfect equal highs. And price took out the buy sell liquidity right here and also filled some fair value gaps, and then it started to push down. So yeah, liquidity rate is a definite for the price action to form. And the thing here is we must know where the liquidity lies. In my case, I assumed the price had swept the buy sell liquidity in the form of Asian ice and started to push down. But the reality, price still wanted some more buy sell liquidity. Thus, it took the pending buy orders. I mean the the stop losses above this high, above the London high, and then push the price down. So this would have been definitely a loser if I had placed my order during the London lull period. Sometimes it plays out, sometimes it doesn't. In this case, it didn't play out. So, yeah. The thing here is I must be consistent with one approach. I must either place my orders during the London lull or avoid placing them at all. So if I place sometimes and if I don't the other times, then that would create a disturbance in my strategy and the strike rate would definitely reduce. So after taking the buy side liquidity, the price had chalked bearish. Now again we are having a clear POI where I can look for shorts if the price pulls back, and I can expect the distribution during the London New York lull period to take out the weak internal high. So that's what I expected. And these are the phase A2 conditions. And this is the lid that I expected the price to take before pushing down. But unfortunately, it was almost 236. Just two more M15 candles to be printed. And I definitely know that price will not, even if the price reaches the lid, then I can't place a trade because that would be London, New York lull. So what I can do in these cases is I can just save 30 minutes of my time or 30 minutes of my screen time, just get away early, uh, or write the EOD update and what happened on this day, the feelings, emotions, and what I expected, what I did, what happened, and what happened unexpectedly, all those notes, all those post session notes that you want to write, you can write off and then send off for the day. So yeah, that's it. So that's how I didn't get any trades on both EU as well as GU. So yeah, that's it from my side. So see you on the next week, that is November 18, 2024, on Monday. Until then, cheers, guys. Bye. Thank you.